Okay, ladies and gentlemen, we are continuing with our lecture on balancing ledger accounts. Okay, and if you still remember, the main focus of this lecture is on recording, summarizing, and posting transactions and completing ledger accounts and financial statements. So as part of that process, we have to balance our accounts. Okay, we are not going to do books and books and books forever. By the end of the month, we have to report to managers how much we have in terms of sales, how much do we make in terms of sales, how much cost did we incur in terms of expenses and costs for the business. Okay, and we have to know how much in terms of assets, what are their values after considering issues like depreciation and so forth. We have to report. So what do we report? We don't report the entire books, but we report balances. So this is why we have to balance up each account. Okay, so let us go through Mr. Rindai Banga's example. Okay, let us consider this example as part of our learning. Okay, thank you. Now we are given that information. Let us just go straight away into it. Okay, Mr. Rindai Banga commences trading as a wholesale. You know, for in an exam, you need not to read and read and read. The first thing you have to do is to go straight to the questions. These are our questions. These are our tasks. What we have to do. Okay, this is what we have to do. So we just just resave it. Okay, okay, this is the task. All right, let me just highlight it here. All right, what we have to do, the business of the day. Okay, the tasks. You are required to record the foregoing, that is these transactions. Okay, these transactions, all of this, in appropriate books of original entry. Okay, so you have to record them in the books of original entry, and at this level you now know which ones are the books of original entry. And we said that we have got the cash book, the paid cash book, we've got sales day book, purchases day book, and the journal. Okay, the journal. Okay, sometimes these books, the SDB and PDB, they've got their own returns day books, so they become sales returns day book and purchases returns day book if there were returns made in their respects. Okay, so these are the books of original entry or prime entry. All right, now let's move on. Okay, so Mr. Rindai Banga commenced trading as a wholesale stationer on 1 May 2007 with a capital of $5,000, with which he opened a bank account for his business. During May, the following transactions took place. Okay, so those are the transactions which took place during the month of May. May 1, bought shop fittings and fixtures for cash from Folder Fitments. Okay, they bought shop fittings, and we need to, the first book of prime entry we need to deal with is the cash book. So let's start with the cash book. All right, let's start with the cash book. Okay, and I'm going to use this Okay, so part A, prime entry books. Prime entry books. Okay, so we are going to start with the cash. Okay, the cash book receipt side, because we just have to do it systematically. Okay, the receipt side of the cash book. Okay, our cash book. The cash book is both the debit and the credit entry. The credit side. Okay, debit and credit side. All right, so the receipt side is the debit side. Okay, the receipt side is the debit. All right, because we are receiving cash in this case, so we're going to start with the receipt side. Okay, so we have got the column for date. Okay, the column for date, details, column for details. Okay, column for details, and total. Okay, then we've got the items we are talking about, like for example capital. Okay, capital. Okay, we've got sales. Okay, this is an analyzed cash book usually. Okay, and receivables. Okay, okay, you will discover that usually a transaction like this, receivables, it's main, I mean, it's a book of original entry. The main book of original entry should be the sales day book. Okay, sales day book. However, when these guys who had bought goods from us on credit, when they come to pay or to settle their accounts, we have to record that money in the cash book because it's a cash receipt. Okay, but initially they were recorded in the sales day book. Don't be confused there. All right, now let's go to the facts. Now we have got we can also do the same for the cash book payment side. Cash book payments side. My spelling for cash book, this is not one word. Okay, cash book payments. Okay, so that we complete the information as we read the question, because in the exam you don't have time, and these days, because of the computer-based nature of our exams, we are no longer required to come up or to draw these cash books. Okay, but you have to know that, because the examiner might say, hey, I want you to come up with a cash book. What is missing in this particular cash book? Which column is missing? You have to show him that you know, you understand what's going on. Okay, okay, and we'll write we have columns, we'll name them as we read. Okay, as we read the question, we'll know what is needed. Okay, this is the information. So let us go back to the question. On the first day of May, we bought shop fittings and fixtures for cash from folder fitments for $2,000. So if we bought, did we receive or we gave out cash? Obviously we gave out cash. Okay, so we have to enter it in the payment side. So on the 1st of May, that's May 1. Okay, May 1. Where did we bought these things from? We bought them from Folder Fitments. Folder Fitments. That is 2,000 bucks. 2,000 bucks. Okay, 2,000 bucks. These ones were for fittings. That's the advantage of fixtures and fittings. Fixtures and fittings. This is a dollar sign. Okay, fixtures and fittings, $2,000. This is the advantage of having an analyzed cash book. It tells us, okay, we bought, these were the items which we bought or which we paid for. Okay, this one, and who was receiving the money, this company. Okay, so dates, hey, not nature here, it's details. It's a typo. Okay, fine. Okay, details. Sometimes they call it narrative. Details or narrative. Okay, narrative or details. Fine. That's how we record it in the cash book. This is the payment side, or we call it credit side. Okay, the credit side of the cash book. All right, but do not be confused. Entries on the credit side doesn't mean that they are their debits. Their debits, corresponding debit entries, are found in the same cash book. No, it doesn't work like that. Okay, it doesn't work like that. Okay, I'm sure you understand what I mean. Okay, we bought goods for cash from Folder Fitments. Okay, we're not going to have a corresponding debit entry in the cash book. Okay, we're not going to have to find a corresponding debit entry in the cash book just for the sake of having the credit and the debit side balancing. No, it doesn't work like that. Okay, so what it means is the debit entries you are going to see, they are not necessarily linked to this. Okay, they're not necessarily linked to this. Okay, because what we found or what we received from fitment and fixtures was not cash. We received fixtures and fittings. Okay, fixtures and fittings, and these ones are not going to be recorded on the debit side. They're recorded somewhere else. Okay, they're recorded somewhere else. You understand as we go. Okay, so let's read again what happened on the following day. Purchased goods on credit from Staple, 650. Purchased goods on credit from Staple. Do we have to record this transaction in the cash book? No, we are not going, because it is on credit, so we skip it. Okay, sold goods on credit, we skip it for the purpose of cash book completion. The purpose of cash book completion, we're going to skip it again. Purchased goods on credit, skip it. Sold goods on credit, skip it. Cash paid, induct into bank. I mean, cash sales paid, induct into bank. These are the cash sales. So what happens is we're going to record, because cash sales, that's money, that cash, our cash book has been affected, so we have to update it. We go to the cash book receipt side. Cash book receipt side. What was the day? Okay, the cash book receipt side. But remember, we have forgotten something here, and my mind was driven away when I was now drawing up the cash book payment side. On the very first day, of the when we started the very first day of May, okay, on May 1, there was capital injection. Okay, there was capital injection when Ridaibanga was starting his business. Okay, there was capital of how much? We are told in the question the capital here. Capital, okay, capital of 5,000. The capital of 5,000. So this was cash received by the business, 5,000, because Ridaibanga and the business, they are different people. Okay, remember the single entity concept. Okay, a separate entity concept, where we are saying that the business owner and the business, they are very different, and their transactions have to be treated separately. So these are the business books. So the business is to recognize money that it is received from the owner, okay, as capital. That's it. Okay, then we have to go to the transaction on what was the date? Where were we? Yes, on the 13th, we sold goods for cash, which was paid directly into our bank of $200. Okay, cash paid on the 13th of May, May 13. These were sales, and they were for $200, and sales, under sales, $200. It's a cash sales. All right, then we move on, because in the exam you don't have enough time to play. Okay, received check from Clip in settlement of his account. Now this guy Clip was paid in settlement. This is a receivable. Okay, this is a receivable. We initially recorded this transaction in the sales daybook some time ago, and he has come to settle his account. But because it is money, checks are also money, we have to record that transaction in the cash book. So we go to our cash book receipt side, okay, and say, what was the date? The date was 16 May 16. Okay, Clip, how much was the amount? Clip, okay, Clip, how much was his amount? We are told here, this is when Clip came into being. Okay, this is when Clip, we let off Clip, so he's now settling his account of $700. Okay, Mr. Clip's account is $700. Okay, so we are receiving $700 here. That's our money, and we are having a receivable here, $700. Then purchased goods on credit, we ignore, because this is a credit transaction. Sold goods on credit, we ignore again. Send a check to Staple in settlement of his discount. In settlement of his discount, I mean his account, sorry. Staple, and Staple is a payable. Okay, Staple is a payable because we had obtained goods on credit from him. So what is required is to know, where did we talk of Staple? Yes, Staple here. All right, so we are now settling the account. Okay, so we have to record in our cash book payments side. Mr. Staple, when was that? Because you have to know the date and the amount, 650 on the 19th of May. Staple. Okay, and this is 650 in total, 650. Okay, and usually at this, as an ACCA student, you must be aware that these dollar signs should be put on one place, so that your work won't be clumsy. You just have to tell the examiners that this is the dollar sign. Okay, there's no need for me to repeat and repeat it, this dollar sign. And we now have got a column for payables, because we've got an entry for payables, and this is 650. Okay, let's move on. Let's move on to the question. Let's move on to the question. My phone is ringing here. Okay, let me just cut it off. Now, okay, it's fine. Paid delivery expenses by check. Delivery expenses, we've paid them, so we have to go to the payment sides. And when was the date? The date was before we move to the delivery, there's rent on the 20th of May, paid rent by check. So on the 20th May 20, rent. Okay, this rent. How much was the rent? How much was the rent? 200 bucks. We have a column for rent, 200. You can see how the analyzed cash book is completed. Good. It's fine. That's how we complete. For the purpose of clarity, you can put some double lines here to demarcate your totals from individual individual transactions. Okay, because by the end of the day you have to add up this column. Okay, that's it. Let's move on. On the 21st, paid delivery expenses by check, $50. Delivery expenses. Remember, these are payments. 50 bucks. Okay, you go to delivery. Okay, seems we've got so many payments to write about. Then received from Hugh, 200 on account, 200 bucks on account. From Hugh we had taken 580, but we only received, we had sold goods worth 580 on credit, but we only received 200. Doesn't matter, we have to record the 200 bucks. So we go to the receipt side. Receipt side. When was the date? What was the date? 24th for $200. 24th of May. Okay, Hugh, Mr. Hugh, 200 bucks. Okay, receivables, 200 bucks. Now we move on. Drew checks for personal expenses, $200, and assistant's wages. Is this a receipt or a payment? Is this a receipt? Do we record it in the receipt side of the cash book, or because this guy he drew money from the bank? Okay, personally he has received money, but did the bank did the business receive any money? No, the business paid. This is why we are saying the business and the owner, they are different people. Okay, here we are talking of business records, business transactions. So in the eyes of the business has paid out money. It has paid out money, but these monies should not be accounted as a single transaction. Okay, Drew checks for personal expenses. So the personal expense was $200 and the assistant's wages was 320. So this one, we call this one, the personal expense is called drawings. These are drawings, and these ones now are called wages for the assistant salary. They are wages. Okay, so we have to record two entries here. So we have to make sure that we have got space. We have to make sure we have got space. Okay, we have to make sure we've got space. Okay, in our payment side of the cash book, we need, this was a delivery. Okay, this was a delivery expense, so we need at least another entry here, two more entries, drawings and wages. Okay, so the drawings, what are the dates for drawings? On the 30th. Okay, the 30th of May. Drawings, they were $200, and we go to drawings 200. Okay, and then wages 320 on the same date, wages. Okay, $320. Okay, do we still have any other information for okay, settled the green account, settled the account of green. Okay, and green, how much did we borrow from green? Goods from green. Where is green? I can't see any green here. Okay, here, yes, this is our green, the Mr. Green. The Mr. Green is there, $300. So we settled $300. We are not going to write this date here, but we are going to write the date of the transaction, that is 31st, $300. Green, $300, and green was a payable, so we go under the payables column. Okay, that's it, ladies and gentlemen. Do we still have any more transactions, further transactions? You can see that for the purpose of cash book completion, we've done justice, and we need to to balance up the cash book. Okay, we need to balance up the cash book. Okay, so what happens is you have to add up these totals using calculators. Okay, and come up with the totals here. You have to totalize everything. Okay, so 2000 the payment side, 2000 plus 650 plus 200 plus 50 plus 200 plus 320 plus 300. It should give us something like there's no need to put the dollar sign again, so 3,720. Then we have to total again here 2000. I prefer putting a comma here. 2000. Okay, you can just leave that, you can just write without a comma, doesn't matter. Okay, doesn't matter. And 650 plus 300, that's 950. That's 200. That's 50 here. That's 20 and 320. Okay, you go to the receipt side, you do the same. You have to add up 5.2, 5.9, 6.1. 6.1. Okay. Oh my god, these commas. (6.1). Then we have to add up these are the columns. Like I said, you can just put a double line here. Okay, 5.1. I mean 5,000, 200, 900. If you add these up, if you add these values, they should tally with this. Okay, they should come to 6.1. Okay, that's fine. We are done with the cash book. We're done with the cash book. Let us see now other records. Okay, let's see other records now. The day books. The day books. The day books. So we are starting with the sales day book. Sales day book. Information in the sales day book. What we need, okay, just simple information here. If we can have the date, can have the customer, okay, and the amount. Don't need much information, okay, and the amount. Don't worry about the text, this and that, which you talked about earlier. Or don't worry, in this case it's not necessary for now. Okay, we go back to the question. Sales day book can also open up the purchases day book. Purchases day book, as we did in the cash book analysis, and we need the date, supplier, and the amount. When we talk of the amount, we are talking of dollar signs, dollars, because by the end of the day, accountants report in money. They report in money. You know, the monetary amount concept. Okay, the monetary amount concept. Okay, so if we go to our question, let's start with the remember, these day books, they report, they talk of transactions which were done on credit. Okay, so purchase goods on credit. On 1 May, bought shop fittings for cash, so ignore. Purchased goods on credit from Staple. So this is a credit transaction. We go straight away to the payables ledger. I mean payables day book. So, purchase day book. Purchase day book. Remember, these are just list of transactions. They are list. There's no double entry in these books. There is no double entry. They are just lists. Okay, just list what happened, what has happened on a day-to-day basis. So you just make an entry in them without worrying about any double entry bookkeeping. So when was it? On the 2nd of May. 2nd to May 2. Staple, Mr. Staple. Okay, Mr. Staple. How much were these goods? 650. This is a 50. Okay, and let's move. Sold goods on credit to clip 700 sales. So we go to the sales table. What was it? I think we can do this Let me just try. Sorry, it may flop. Flop. It might not work. It might not work. I think it should work. I think should work here. Should work. Okay. Then we've got this guy here. This guy here. Yeah. So I sense some disaster. Here. Oh my God. Sorry for the delay, but without learning we're not going to grow. So we need to have an attitude of trials. Just have to try things out so that we improve as we go. If we fear to try things, we won't know. So I'm sorry for your time. Okay, I'm sorry for your time. I'm trying to open this document with an Adobe reader, Adobe Acrobat reader, so that we do our studies in a better way. Okay, in a better way. And in a better way. So that's our Mr. Rindaibanga. Okay, good. This is what I wanted, ladies and gentlemen, so that we see what's happening without going up and down. Okay, so for the unfortunately here we don't have the typing, but doesn't matter. Okay, Mr. Rindaibanga commence trading as a host or station house, this and that. We want information to supply us in our day books. So purchase goods on credit, we did this one, we coded it here, fine. And sold goods on credit to clip 700. So we just have to slot the information for clip. When was the clip's transaction? And the record is saying that clip did it on the 4th of May. So May 4. Okay, clip 700. Okay, so clip's transaction was for 700. Okay, and then we move on. Purchased goods on credit from Green on May 9. So May 9. This double apostrophe, this apostrophe stands for just same as. Okay, same as. Okay, May stands for May. Okay, so May 9. Purchased goods on credit from Green. So we write Green here. 300. Okay, 300. Then we move on. Sold goods on credit to Hugh 580. Hugh 580. When was that? On the 13th of May. Hugh 580. Okay, and we move on to Cash sales paid, we ignore. It doesn't affect the sales daybook or purchase daybook. Received check from Clip in settlement of his account, we ignore it. It's a cash book transaction, and it had already been recorded. Okay, this Clip is okay when we sold him initially, okay, on the May 4th. Purchased goods on credit from Kaye. Credit from Kaye, 17th. K or Kaye from K, 300, 800 bucks. Okay. Then sold goods on credit to Naila on the, when was it, on the 18th. Naila, how much was it? 360. Okay. Send a check, doesn't involve it's a cash book transaction. Paid rent by check, cash book. Paid delivery expense by check, cash book. Received from you, what, cash book. Drew what, this and that from the bank, cash book. Settle account, what, cash book. So we are done with our sales day book and purchase day book entries. We have to add them up here. 700 plus 580, that's 1280, plus 360, that's 1640. 650 plus 300, that's 950, plus 800, that's almost 1760. We are done. Okay, we are done. We're done with the day books. Okay, we are done. We're done. So I think we have done justice to part A. Okay, then we have to post these transactions now. We have to post these transactions to the ledger. Okay, to the ledger accounts, that is the general ledger. Okay, we are not required, remember, we are not required, if you see here, tutorial note, you are not required to complete any entries in personal accounts. The personal accounts, those ones are receivable ledger account, okay, receivables ledger account or payables ledger accounts, like the memoranda accounts, the receivables ledger, the receivable ledgers or purchases ledger, they're called memoranda or personal accounts. We are not allowed to open up those ones. Okay, like for example, to open Mr. Clip's account or Mr. Hughes' account or Miss Naila's account, or in case of payables, these to open up their individual personal accounts, we have to ignore that for now. Okay, what is needed, they are only general ledger entries. Those ones are the ones which we need to open up for now. Okay, but unfortunately now I think I no longer have space to write these things out, so I don't want to erase the data. So what I'll do is I will open up, I'll use another record here. Yes, good, because I'd open up the two of them. So I'll continue here. Okay, continue now. Let's start with the cash account. The cash account is part of the ledger account. Okay, the cash account here now, these are now double entry transactions. So because when you talk of ledger accounts, we are now talking of complete double entry. Okay, where we have got T accounts. These sometimes are called T accounts, where we have got the credit, the debit, and the credit side. Okay, debit and credit. We've got dollars. Sorry, this is the credit. We have got the dollar sign. Don't mind my writing. It's a dollar sign. Hey, just know it's a dollar sign. Just know that it's a dollar sign. Okay, so in the cash account, remember we've got the receipts and payments. Okay, we've got receipts and payments. So that all the receipts are going to be put on the debit side. All the so here, all the receipts for May receipts, all May receipts, and here all May payments. We have done this already. Okay, we have done this already, but we want now to balance. This is now balancing. Okay, okay. We need to post and balance. Okay, so you can see that item B and C are already going to be completed simultaneously. They are being completed simultaneously. Okay, you post and balance. Okay, we post. So the total receipts for May, if we go to our cash book, they were 6,100. so we just take that figure, 6,100. Then the total payments for May, they were 3,720. 3,720. Okay, that's, we've posted now, but we need to balance up. So by balancing, we are saying that the debit and the credit should balance. So the larger amount, or the larger side, should have its amount written in both sides. Okay, but that's not true that 3,720 adds up to 6.1. It means there is a deficit. That deficit is what we call balance carried down, balance CD, and we have to determine the balance here using our calculators. Ladies and gentlemen, 6,100 minus 3,720, we get 2,380 as our balance carried forward. But if a question in the exam said, what was the balance for cash? Okay, then you are given choices like, because when we say balance carried down, it is now the opening balance. This is the closing balance for May. Okay, for May, this is the closing balance of cash. But for June, it will be, for June now, 1 June here, down here, 1 June, it will be balance brought forward. The same figure should be taken here, 2,380 debit. Like I said, cash or assets by default should have a debit balance. This is the debit balance we are talking about. Okay, in the exam, if the examiner says, what was the cash balance for May? What was the cash balance for May? Okay, they are referring to this balance brought forward. That's the balance for the cash account, because this is going to be the balance reported. Okay, this is going to be the balance reported for future months or future periods. Okay, so if you're given A, balance CD 2,380, B, balance CD, balance B, F 2,380, you have to choose for this, because we are saying assets balances should be on the debit, should be debit balances. If you're having an asset, if it is still an asset, it should be reported with a debit balance. Or sometimes they just say, hey, when I waste the eraser. Okay, sometimes they just say credit 2380, debit 2380. Normally, this is what they mean. We are having a debit balance. Why? Because the CD, the balance CD occurred on the credit. Obviously, the DB, I mean the BF is going to be on the debit side. So we are having a debit balance here. This is a debit balance. I'm sure you are not lost here. Okay, I'm sure you are not lost. The balance for this cash account is reported by the BF. That's what I'm trying to say. The side where this BF is, explains the nature of the balance. In this case, we are having a debit balance of 2380. Okay, but sometimes payments exceeds receipts, and we will be having a balance CD on this side. If there is the side, if this is the side with the shortfall, then if the balance CD is on this one, the account balance will be on the credit side. Okay, and it will be a credit balance. But in this case, it is a debit balance because the balance brought forward is on the debit side. So sometimes the cash account itself or the asset account sometimes may end up having a credit balance. In that case, the asset is depreciated, has lost its value, or in this case for payment, the payments have outweighed the receipts. But as it is now, our receipts are more than the payments, so we are going to have a debit balance. The cash account still have got something in it. I'm sure you've been helped. You understand as we go. Let's move. Let's move. Okay. Let me just erase these things for now. So we have done justice to the cash account. Let's move on to the sales account. Remember, the purpose of doing this is for us to report. Now, when we report for cash in the balance sheet, this is the figure we are going to take. Or the trial balance is going to also to take this thing, this figure. All right, so let's move. Sales. The sales account. Like I said, these are T accounts. Okay, the sales account. Sales. If you still remember from our PO's acronym, the sales should have some credit balance. Okay, by default, they should have some credit balance. All right, but let's see what's going on. Okay, here we report both the sales on cash and on credit, and sales on credit are called receivables. Okay, how much were sold for cash? How much sales did we sell for cash? We can go directly to our cash book because we have done the cash book and we have got the sales column here. Okay, the sales, cash sales, they were 200. So they have to post to the sales account just $200. This is where auditors catch up accountants. They catch accountants when they fail to ensure consistency in their way their records are presented. Okay, you are saying that in the cash book you sold goods for cash worth $200, but in your sales account the cash transactions are saying you sold for 2,000. So that's where the trouble begins. Okay, then receivables. Where do we get the information for receivables? Receivables, these ones should be from our sales day book, because these are receivables for May. Okay, for May, sorry. So if we go to May sales day book, it should tell us something. This is the total receivables. Okay, these guys collected goods from us on credit. Okay, they collected these goods on credit. Okay, something is happening here. My camera can't show me. Don't know where it did go. Don't know what's happening. Why is it not showing me? Okay, doesn't matter. Okay, this is the receivables. Okay, these are the receivables. Okay, these are the total receivables. So we just have to slot the figure 1640 into our account, and we have to total up 1640 plus 200, that's 1840. Why did we total up? If we had sales returns, then we are supposed to have made another entry here, but we didn't have. So our balance CD is 1840, because we can't have a balance here without something here. Okay, so the balance CD is 1840. You can see that there's 1840. Here there is 6,100. So these totals should agree, both sides, the debit and the credit. Okay, so we're having 1840, but the balance for sales is the balance brought forward, and you can see that the balance PF is on the credit side. Remember, this is the credit side and this is the debit side, and like I said from the PO's acronym, sales should have a credit balance 1840. Am I talking to somebody? Okay, then we have got purchases account. The purchases account, ladies and gentlemen, the purchases account also have got a debit and a credit. Okay, but purchases and sales, they usually oppose one another. If you know that the cash element for sales is on the credit and the receivables is on the credit, obviously the opposite is true to purchases. I mean, for purchases, so usually the cash should be on the debit. Okay, remember, purchases are increased by debiting. If you go to the PL's acronym, the PL's, this is a demarcation here, okay, between A and R. All right, these ones are debits, these ones are credits. Okay, this is a demarcation, this is a line demarcating this guy. Okay, these ones, these are purchases, expenses, assets, revenue, liabilities, share capital. Revenue also means sales. Revenue is sales, or you can just take this as a sales. Okay, so debit, credit. So we are saying purchases, when we increase them, when we buy goods on for cash, for resale, we are buying purchases. So these are purchases, so we debit. This is debiting purchases. If we have any cash, did we buy anything for cash? Let us go to our cash book. The cash book tells us cash transactions. Did we have any cash? You can see that there was no cash purchases. Okay, no cash purchases here, no cash, nothing was for cash. Okay, if there was any cash, we could have just written purchases, like here for sales we written sales. These sales were for cash, so just wrote them sales. For purchases, we could have just written purchases. Okay, so there was no cash transaction, for purchases, so we move on with our life. Okay, so for cash there is 0. Then we have got payables. And from where do we get information about payables? Obviously we get it from the purchases daybook. Because for sales we obtained receivables here. These were receivables here. Okay, but here this is payables. 1760. We go straight to the account and write 1760. Then we balance up. This is balancing. Are we together? That's balancing. 1760. Okay, but like I said, you can't leave and say, examiner, mark me. He is going to give you a 0, because where did you get? You ask you, where did you get the 1760 from? You must say balance CD 1760, and then you're not yet through, because the balance CD is just is not complete on its own. Okay, it must be having a balance BF, balance brought forward 1760, and you can see that the purchases account has got a debit balance, because here the PO's acronym purchases by default have got debit balance. Are we together, ladies and gentlemen? I hope you are being helped. I really hope that you are being helped. Okay, do you still have a space here so that we start afresh? Yes, we still have got 2 more pages. I mean one more. All right, let's talk about the receivables account. Receivables are assets, and assets have got, being assets, they've got a debit balance by default. Hey. Okay, so they have got a debit balance by default. Okay, which means we must increase them by debiting. Okay, we increase them by debiting, or reduce them by crediting. Okay, by crediting. And receivables, they come from sales. So if we make a sale, we increase. If we make a sale by a sale on credit, we increase receivables. And how much were these guys? From our records, the receivables here, these are the receivables. The sales account can give us that information, but we can to be safe, we go straight to the sales daybook. Okay, so 1640. Yeah, 1640, as you can see, 1640. So 1640. Okay. 1640. That's our receivable. Okay. But there is a problem. According to these guys, according to the sales, it has reported receivables as 1640. But there are other guys who have paid their accounts according to the cash book. Okay, if you go to the cash receipt side, cash book receipt side, the cash book receipt side, the cash book receipt side tells us something about receivables. About 900 of them have paid up. 900 receivables. So we received cash here. Okay, about 900 bucks. Okay, received cash about 900 bucks. So we have to then total up. $1640. Okay, but 900 and 1640, it means that there is something missing here. Balance CD. You obtain the difference. 1640 minus 900, that's almost about 740. Okay, and this balance should be here. Balance brought forward. Balance BF 740. That's the balance BF, and it's on the debit side. You're having a debit balance for receivables. Receivables are assets. Why? Because it's money we are going to receive from our customers, so it's an asset. Okay, ladies and gentlemen, let's then meet in the last segment of our audio, and I'm sure about balancing up transactions we've done justice. So let us now go straight to the trial balance. You can finish the other ones, yeah, just to attempt for yourself. I want you to have to show me these remaining accounts. I want you to show me the payables account. I want you to write to show me the T accounts for payables, because I've done the receivables account. So for payables, you just have to just come up with something using this logic. So the payables account, I want to see that one as part of your assignment. Payables account, including the assignment in the slides. I want you to show me these ones. Payables account, I want you to show me the capital account. And number 3, I want you to show me fittings and fixtures, fixtures and fittings account, fixtures and fittings. I want you to show me the rent account. I want you to show me delivery expenses account. I also want you to show me drawings account, drawings account, and lastly wages account. So these are part of your assignment. Until we meet again, let us call this one very pleasant goodbye. But hang on, we need to meet in the next video. Thank you.